There's a reason why 1 in 5 investors in Australia already hold ETFs in their portfolio, not because they're flashy or sexy, but because they work. While some investors jump from stock to stock, hoping to strike gold, ETFs help quietly grow your money while you sleep. The Saver to Investor series is brought to you in partnership with iShares by BlackRock. Meet Tom. With $10,000 in savings, separate from his 3 to 6 month emergency fund, he's ready to take the next step and start investing. But like many new investors, he's stuck at the starting line. Where does he invest his money? As a beginner, it might be tempting to pick a hyped up stock or copy a mate's portfolio. But investing shouldn't be about chasing trends or making 100 times your money overnight. Instead, Tom will focus on 3 core principles: diversification, simplicity, and low cost. Now, what if I told you there's one investment option that can tick all those boxes? ETF stands for Exchange Traded Fund. It's one of the fastest growing investment types in Australia. In 2025, there was a record-breaking inflow of $53 billion into the Australian ETF market, up 76% from the previous year. Instead of picking individual stocks, ETFs let you invest in hundreds of companies in a single trade. Many ETFs track what's called an equity index, like the S&P ASX 200 or the S&P 500. That means Tom doesn't have to bet on just one winner. He's backing the entire market. This diversification is important because if Tom picked just 1 or 2 companies and they underperformed, he could lose a significant chunk of his $10,000. So if one company struggles, other companies can help balance it out. Quick pause. This series is brought to you in partnership with iShares by BlackRock. If you're looking to invest in ETFs, iShares gives Aussies access to countless market opportunities through over 50 locally listed ETFs. Curious to learn more? See how ETFs might fit into your own investing journey with the link in our bio. Now imagine Tom tried to pick individual stocks instead. He would need to research companies, read financial reports, understand industries, and make constant decisions. That's a lot. Even professionals get it wrong. Investing with ETFs removes that pressure of having to be right. Instead of trying to find the next big winner, Tom can simply invest in the overall market. And removing friction points like this makes a huge difference in keeping Tom invested for the long term. Later in this video, we'll explain why staying invested is so important. Most ETFs are designed to simply track the market through an index. That typically means they don't need huge teams of analysts picking stocks. And that usually means lower fees, as this can be done at scale. Why does that matter? Because investment fees can quietly eat into your returns over time. Lower fees means more of your money stays invested. And that gives your portfolio time and momentum to grow. So when you combine diversification, simplicity, and lower costs, you can see why so many investors start with ETFs. But here's the thing, ETFs aren't about getting rich quick. It's about staying in the game long enough for compounding to work its magic. Let's look at an example together. Since 1900, the Australian share market has returned an average of 12.98% per annum, when cash dividends get reinvested. So let's say Tom invests his $10,000 and earns 12% per year, while reinvesting his dividends. Here's what happens. After 1 year, $11,200. After 5 years, $17,623. After 10 years, $31,058. And here's where it gets really interesting. After 20 years, that's over $96,463, assuming no taxes or fees. Tom didn't add any more capital. He didn't have to research winning stocks. He just stayed invested and let compounding do the work. And if he does keep adding more money over time, that's when things really start to take off. So today, Tom didn't just start investing without a plan. He chose a strategy that was diversified, simple, and low cost, so he could start investing earlier and stay invested for longer. Next episode, we're getting practical. We'll walk Tom through his first ETF purchase, how to select a platform, and what pressing that buy button really looks like. See you in episode 3. Thanks to iShares by BlackRock for supporting this series and helping to bring investing education to more Australians. Check out the link in our bio to learn more.